Good afternoon. Your market news now. Shares in Asia slipped as investors remained on edge over Russia's invasion of Ukraine. Hong Kong's Hang Seng Index led losses regionally as it fell 2.5%, and the Nikkei in Japan dropping about 2.25%. Later today, we'll have the last jobs report before the Federal Reserve's next meeting, where the central bank is expected to begin hiking interest rates. Meanwhile, the rand weakened after struggling to gain traction, with the appetite for risky assets sapped as the Ukraine crisis kept investors on edge. The JSE All-Share Index and the top 40 down over 3%. And we're going to put a couple of charts on screen for you just to illustrate what has been happening over the past 5 days. We've had market analysts over the past week talking to us about how our local markets had held up quite nicely, even though we have this background of Ukraine-Russia tensions. But just to give you an illustration, we're going to put the top 40 index for you on screen. That at this particular point is, of course, lower, just over 3%. On the all-share side, we're also seeing the same picture where it's red across the board there. And when we look at some of the movers from a sector-specific point of view, we are seeing that the resources down 1.9%, but it's the industrials that are leading this particular downward trend that we're seeing there. The industrials down about 4.9%. And then also the financials lower about 3.25%. And we look at what's happening from an industrial point of view. It is Naspers and Process dragging us lower. Naspers, Process and the Foschini Group in the top three losers. But to talk to us about what's driving all of this downward momentum, we are joined by Warwick Lucas from Galileo Securities. Warwick, thank you so much for your time. I mean, look at what's happening on the all-share index and the top 40. What's driving us lower today?
Okay, so, I mean, it has been generally a bit of a tough week, and generally South Africa has, as a whole, on the top 40, been doing all right until today. And of course, today's news being the attack by Russian forces on a nuclear power station and the shelling of it. And that obviously, I think, raised a bit of concern, because it's one of those potential events from the left field that really can just surprise the market and concern anyone, I guess. So that's basically meant that we've joined the rest of the world and all fall down today.
When you look at Naspers and Process and their performance today, I mean, any indication, any news that could indicate to us at least what's dragging that one a bit lower? Okay,
so nothing company specific. I think it is more generic. I think there are concerns from a geopolitical point of view that with so much attention being focused on the Russian situation, that China will quietly get on with its own version of authoritarianism and leaning hard on tech businesses in particular, which is an old chestnut for them. So I think that quite apart from general market sentiment and the exposure that the big index stocks have, I think Chinese tech taking a bit more stick than most.
So as you look back at the week that was, we had a few companies release financials from a local JSE point of view. Is there one company that stood out for you in terms of their financials, whether in a good way or a bad way?
Look, I think I took a note of PSG's moves to basically unbundle and delist, and I think that's obviously a bit of a concerning story. I mean, they've created a lot of value for shareholders over the years, but now talking about delisting, and I don't think it was just the case that listing conditions are onerous and that it's tough to be a listed company. I mean, there's now the issue of, well, what kind of rating do these investment companies get? And the answer on the JSE is they're pretty terrible. And I would have hoped that perhaps there was some other kind of engagement that there might have been possible and that could have involved the JSE to perhaps mitigate this. But be that as it may, they're looking to go, and it's one more company that's actually really, really cheap on the JSE that's going to disappear. And I think it highlights, once again, there actually is a lot of value on our local stock market.
So let's take things international for a bit. I mean, how much of an underestimation is there, particularly when it comes to, I suppose, the disruption that we continue to see when it comes to a commodities point of view, food prices, as a result of the conflict in Ukraine?
Okay, so I think one of the themes that we're seeing is really a continuation of what we saw last year from the tail end of COVID, and that is the world is really quite interconnected. In fact, it's very interconnected. I mean, initially when sanctions against Russia were announced, I thought, well, okay, I mean, we're talking about a country here which has got a tiny debt to GDP ratio, only 18%. Its economy is substantially commodity focused, and so they're saleable anywhere. And it would be really like taking knives to a gunfight. But in reality, they appear to be taking quite a bit of pain from sanctions because, I mean, it cuts them out of the global payment system. So even if you're selling commodities, then, well, how do you get paid and what do you do with that money once you get it and so on? So perhaps Russia wins its war physically on the ground, but they will lose a great deal economically for their efforts. And I think that perhaps is a bit of a game changer, that sanctions can actually have a real and meaningful effect.
We have U.S. February jobs report due later today. What's the market looking for?
Okay, so the consensus there is 440,000, which is one of the biggest numbers I've seen for a little while. I mean, obviously, at this stage, with the impact and confidence that we're seeing, both in terms of accelerating inflation and the geopolitical fallout from the Ukraine crisis, I think that the market more than likely will look through this number, whatever it might be, because I think the bigger concern in terms of the Fed is not so much what's happening in Ukraine, but there is growing pressure, I think, there to respond to inflation and basically not stay behind the curve. So I think that unless it's a low number, I think that we probably could see some more shakeout from that one.
All right, Warwick, thank you so much for your time. That is Warwick Lucas, of course, from Galileo Securities. And adding to that, investors will be looking at the wage growth figure, which is expected to increase around 6% with a drop in unemployment, and also taking it forward to next week's US CPI figures. But that is it for me. We'll have your money and S&P on point after the break, so stay tuned.